Hey guys, welcome to my YouTube channel. In this video, we are going to discuss about Capital Stock Insurance Company. So let's get started. What is Capital Stock Insurance Company? A capital stock insurance company is an insurance company that is owned by shareholders rather than policyholders. These entities get capital from share stockholder contributor in addition to their and reserve accounts, with the majority of their assets or money coming from the sales of shares. So these are the main key points that we have already discussed in the previous video. So now we have to discuss about the understanding a capital stock insurance company. All property and casualty insurance performs the same basic functions, selling insurance policies of customers. Where they vary in some way are organized capital stock insurance companies, while other operate are mutual companies. The main difference between the two is that mutual insurer is owned by its customers or policyholders, while a stock insurance company is owned by its shareholders. So, a stock insurer may earn more profit to pay off debt or reinvest in the company and distribute anything that is left to shareholders in the form of dividends. In the case of a mutual insurance company, meanwhile, the surplus may be distributed to the policyholders in the form of dividends or retained by the insurer in exchange for the reductions in future premiums. The specified amount of the payment required periodically by the insurer to provide coverage under a given plan. So, a main thing is important. A capital stock insurance company may be policy traded, while a mutual insurer is always privately held. So, in addition to issuing shares or stocks, capital stock insurance companies get the wealth from their surplus and reserve accounts, which are funds set aside at the beginning of the years to meet a cost of the old and new claims that have been filled. So, capital stock insurance companies versus mutual insurance companies. What's the difference between capital stock insurance companies and the mutual insurance companies? So let's get started about the discussion. Both stock and mutual companies earn income by collecting permission from the policyholders. However, their investing strategies often differ. A stock company primary mission to earn profit from shareholders, as they tend to focus more on short-term result with higher yield and risk assets than mutual companies. So, by contrast of mutual insurer mission to the maintain capital to meet the needs of shareholders, policyholders are generally less concerned about the insurer financial profile and that is investor of the stock companies. That means they focus on the long-term results and they more likely to stock insure to invest in the conservation low yield assets. So here are the different advantages and the disadvantages of stock insurance companies. Many people favor mutual insurers over stock insurers since their priority is to put their customers first. The argument goes that it is not always easy to protect the long-term interest of policyholders when forced to keen the short-term financial demands of investors. At times, pressure from the stakeholders can be a good thing. Through mutual insured policyholders tend to be less vocal than stock insured holders. Call for change for investors may yield positive results, forcing management to justify expenses, make changes, and maintain a competitive position in the market. Another benefit of capital stock insurance company is that ability to raise money. When a stock insurer needs capital, it can issue more share a stock. A mutual insurer does not have option in its arsenal and must borrow funds at increased rate or boost its coffees. So this additional flexibility explains why many mutual insured have demutualized over the years. When policyholders become stockholders and the company shares begin trading on a public stock exchange, insured are able to unlock the value of access new source of capital, making it easier to fund rapid growth and expansion in domestic and international markets. A digital wallet for all your Web3 needs. From crypto to NFT and beyond, accessing a wealth of DeFi platform is simpler than you might think. With OKX, a leading digital asset financial service provider, you can access world-class security as you trade and store assets. You can also connect existing wallet and win up to $10,000 when you complete a deposit of more than $50 through a crypto purchase or top up to 30 days registration. So compare companies there that do OKX and XTB online trading platform. So these are the different platform we have already discussed. I hope you will like our videos. Please subscribe to our channel for more interesting videos.